Morning, everybody. What is up? Welcome to the morning show here on Stock Market TV. Spencer, JC, Steve, Alfonso with you this morning. What's going on in the market? Let's take a look around here. What do we got? We got jobs number just came out. For those interested, I guess that's the last key data point before the next FOMC meeting. Looks like the number was a little bit on the light side, so maybe some movement after that. We got a lot going on. Fridays are busy for us on the morning show, right? We have Kenny. We have Louie because it's Crypto Friday. We have Alfonso. We have Todd Sohn on the show today. So a lot to get to. Not a lot of time to get to it. So let's get to it. What's up, chat? What are we doing? Smash that like. Here we go. Where's my intro?
All right, good morning, Mr. Steve Strazza. Was this morning's job number as good for you as it was for me?
A lot of jobs. Every morning I wake up and it's more jobs. It's jolts.
So everybody has a job?
Now there's the farms. There's so many jobs.
There's
It was
the
fine.
ADP,
Right,
there's the jolts.
Hold on. This is important. This is important.
like,
Ready? Watch JC put on his economist hat, right?
Oh shit.
So my understanding is that if too many people have jobs, that's inflationary and that's not good. So we need people, correct me if I'm wrong, we need fewer people to have jobs for the economy to be better. Do I have that right?
Halfway.
I don't think so. Again, just like yesterday, still not an economist, but I think it's a little bit more than that.
It's a little more than that. All right.
I think so. You know?
Yeah.
Right. I like to think that more unemployed people is better for the economy. That just makes me happy. That just like, that the lack of logic there just brings a smile to my face.
Well, there's all sorts of jobs data. Right? You have wages, which is a measure of really inflation. You have, like you're talking about, JC, the unemployment rate. You got the labor force participation rate. Also all sorts of stuff going on.
I want to know when these goddamn farm payrolls come out. I've been waiting for these farm payrolls forever. How come nobody ever wants to talk about the farmers? Is that not? I'm a little bit, I'm with the farmers on this one. Just not getting any love.
I'm with you. They should be represented.
Represent the farmers.
Yeah.
We should start a petition. We should have farm payrolls on Fridays, right? Shout out farmers. I did a little gardening back in the day in California. Does that count? Probably not.
No, you didn't.
What do you mean? I had a garden. Really? Yes, I did.
What were you growing? What were you growing?
Avocados.
I make wine. We have a vineyard in Napa. Does that make me a farmer?
Did you have an olive tree?
I did not have an olive tree. I had rosemary bushes.
Almonds.
Oh, rosemary. That's nice.
Yeah, that's nice. All right, let's go to State of the Markets. Let's do this.
All right.
All right, ladies and gentlemen, big jobs and most important jobs number in the history of the stock market just dropped this morning, and we had the Dow futures down 77 points. It's about 20 basis points. S&P 500 futures down 10 points. That's about 20 basis points. You got the NASDAQ 100 futures leading the way to the downside, down 0.5%, down almost 100 points this morning. 30-year bond futures, they like it. We're long. We're thrilled about it. 126 on the 30-year futures. You got crude oil up almost a full percent, right around $70. Copper up about 0.2%, 416 this morning. Gold up 0.5%, 25.5. Silver up almost a full percent, 29.25. With the volatility index still hovering right around 20. Over in funny money land, you got the Bitcoin, likes the number, 56,500, up 0.5%. Ethereum just under 2,400, up about 1%. Solana up almost 2% today, 131. Binance still sucks, 506, flat on the day. Total crypto market cap, Spencer Israel, 1.94 trillion, with the Bitcoin dominance still above 57%. What stands out from the futures, folks?
More of the same, right?
More of the same?
In terms of just indexes opening lower, tech opening lower, right?
Bonds opening higher. Bonds have been doing well.
Yeah.
New year to date highs for the bonds. You see that?
Uh,
I did not see that this morning. No. Is that true?
I'm gonna throw up the new slide 2 now. This is the benchmark 10-year note ETF. So it's the benchmark for U.S. Treasury bonds, closing yesterday at the highest level that they've closed at this entire year. Highest close since May of last year, as a matter of fact. So U.S. Treasury bonds hitting new 52-week highs. Breakout multiplier trade came in. Some people sitting out there wondering, why is JC talking about Treasury bonds? Why is Sean, of all people, talking about Treasury bonds? That one, I didn't see that one coming. Talking about Treasury bonds. Spencer, if you could throw in the breakout multiplier trade, the whole idea behind breakout multiplier is to take boring trades like this. This is probably the sheer definition of a quote unquote boring trade and turning it into something where we can potentially make 200, 300%, using this particular system. So we are multiplying the breakout. This is the breakout multiplier. Right? I came up with that this morning, by the way. I thought that was pretty good. The breakout, what was it?
We're multiplying.
I gave it a good name this morning. We are breakout multiplying. Is that what I said?
Oh boy.
I had a good quote. I said, ready for this? This week's U.S. Treasury bond trade multiplied. I thought that was pretty good.
Look, when you think of bonds or treasuries, you don't think of, going 2 or 3x, but if you trade with call options like anything else, then it happens.
Listen, when we were thinking about breakout multiplier and figuring it out, treasury bonds were not even in the conversation. It was more like, how do we take like a boring healthcare stock and make big money from it, or an insurance company or something like that. But the truth is, Strazza, this is the best example, actually, of what theoretically is a boring trade that we can use some leverage, right?
It's perfect in that way. Absolutely.
Yeah. I didn't think about it. Did you? No.
Look, rates are rolling.
When you were thinking
over.
about breakout multiplier, did you have treasury bonds in the back of your head? No chance. No chance. Did you? Surprised. I hadn't thought about it. It was like so far, it was so far removed from where my head was at. But this is it. This is the best example of why we use breakout multiplier. Okay.
Yeah, definitely not the first time we're trading treasury bonds with long calls. Won't be the last either.
Are you kidding me? Some of the best trades I have ever put on in my entire career have been treasury bonds long calls. Paid for my wedding with this trade in at the end of 2018. Got married in 19. Back in 16, it was a big one. COVID, big one, right? I mean, I've had good memories. Bad memories too, by the way. They're not all good, but certainly stand out.
We got the chat talking about bonds now. Shout out Yosel, zeros. Yeah, I like it.
Yeah.
They all look good, JC. Look at like emerging market high yield. They all look good. Any bond fund, pick a bond fund. It looks good right now.
How about that?
The zeros.
Oh, get ready for this. I want to talk about the Fed. How many of you had that in your bingo card this morning?
Did I? What? Wait, did I just?
I don't think you do.
What did he just
say?
Like
part of the soundboard, JC. I want to talk about the Fed.
we can arrange this. This can be arranged.
Oh, I'm fully aware. Please don't, because it kind of sickens me a little bit that those words just came out of my mouth all in the same sentence. But the truth is, I want to look at slide 3. This is a good one. This is a good chart. If there's going to be any Fed chart that I'm going to give a shit about, I think it's going to be this one. Right?
You know what? I like this chart a lot. I saw one that says more or less the same thing as this, but it was expressed in a different way. Where was it, from Goldman Sachs? I forget who. It was on Twitter this morning. But I couldn't understand the chart for the life of me. It was like a table. It was confusing as hell. This gets the point across. Thank you. This is a much better way of explaining the same information, which was what happens after the first cut in a cycle, right?
Because remember, there's a lot of things we don't care about. Like, we don't give a shit who the president is. Like, are you kidding me? That's the last thing we care about. What we do care about is how the election and the president and the year surrounding the election and the year after the election, how that impacts the stock market. That's what we're interested in. We don't care about your Trump or your Kamala or whoever, right? We don't give a damn. Doesn't matter, right? We care about how it impacts the stock market. That's what we're here to talk about. The Federal Reserve, like your Powell guy, like we don't care about this man. Like we don't. But we are interested in how it impacts markets, right? That's what this is all about, right? We take what's, the narrative out there, what people like to talk about, and we bring it back home to what actually matters, and that is dollars and cents. How are we going to make money from this? Doesn't matter whether you like the guy or hate the guy. It doesn't matter at all. How are we going to make money? And I think this chart is nice. A lot of people spend a lot of time thinking about the Fed, worrying about the Fed, disagreeing with the Fed mostly, right? Criticizing the Fed. And, these here we're looking at the 6-month performance going into the first rate cut, and then the 12 months after the first rate cut. And, a lot of things that, I hear about, are the inverted yield curve. Here comes a recession. Yield curve has been inverted for so long. This is the longest ever. That means recession. Oh, the yield curve is inverting. Re-inverting, uninverting. That means recession. Like it's always like a recession whenever I mention the yield curve, right? So I don't know about all that. Like I like to say, recessions are a choice for most people, particularly those
real fast
who own most of the assets in the stock market, right? So worrying about recession makes little sense. Getting back to the stock market. Yes, Spencer.
Yeah, what is the y-axis here?
It just starts at a 0 mark, right? So the y-axis is just the gains, the percentage gains.
Okay.
Right? So these are the percentage gains post first rate cut, right? So again, not a Fed expert, not a Fed criticizer. Actually, Strazza is always complimenting the Federal Reserve, which is hilarious. So he's telling me what a great job they're doing. I'm like, that's interesting. Everybody tells me it's the opposite, but okay. I trust Strazza more than the Twitterati. So if Strazza says Powell's the man, I'm not going to argue with him. But what I see is that after the first rate cut, stocks tend to do generally pretty damn well with a few exceptions, right? So what's everybody all up in arms about, Strazza?
So the bad years were 1995, is that right? 2007? Hard to tell, man. And
but forget about which years. I just see like a dominant theme of line go up after first cut.
I see if stocks were in a downtrend before the cut, then they stayed that way with a couple of exceptions, it's like. Or if they were in an uptrend, they stayed that way. It's kind of what I see.
I just see most of them going up, right? So like I don't really know what everybody's so sad about. Like people are like fucking depressed about like the Fed. Like, oh, who cares? Right? So I'm just not seeing it. So I think this chart is a good reminder as to, don't overthink all that stuff. Most of the time the stocks go up after the Fed cut. So we can move on now, right?
I think this is a good point because it's like a counterpoint to conventional wisdom around this, which is if rates are coming down, if the Federal Reserve is cutting, sometimes they're cutting, a couple cuts at once. It's usually a bad economy, a bad market, and people associate that with lower stock prices. So this is a good, actually chart.
It's a good actually chart.
Yeah, it's like actually, right?
Can you throw up, I want to refresh this one more time. Can you throw up slide 4, please? Because this is the one that these, there's some terrible, horrible people out there that have been telling you that a recession is coming any day now for over 2 years. Like these are some of the worst humans on the planet. And a lot of this sort of thing stems from this chart where the yield curve is uninverting. In other words, getting back above the 0 line and how that's supposed to lead to a recession. I don't know about all that, but to me, just the eye test alone a reinversion of the yield curve, an uninverted yield curve, a yield curve back above zero, to me says buy bonds, no?
You've been thinking about this chart a lot, haven't you?
I don't know.
Yeah.
It gets brought up a lot.
Mhm.
Every time this chart gets brought up, it's because a recession's coming for years now. Whether it's the original inversion, whether it's the fact that the inversion was there for so long, whether it's the fact that we're now no longer inverted. For every one of those, recessions around the corner for all of them, right? So I find that to be hilarious.
Sure.
Again, recessions are a choice for most of the people that own stock market assets. To me, I look at this, and I don't know about the economic implications. To me, it says buy bonds. I think it's that simple, is it not?
I couldn't agree more, my friend.
Why do people hate on Dan Nathan and Guy Adami so much? Like, have you noticed every time we talk about gloom and doomers, like those are the names? Are they really that gloom and doom? Like, I don't even know.
I don't think about that.
I know Dan Nathan very well. Like, is he Mr. Gloom and Doom?
Listen, he's wrong a lot, but he's really.
Yeah, I was gonna say that they tend to be wrong a lot with their picks.
I know, but I don't get their research. Like, if you don't like their research, why would you? I don't understand.
I know, but it's not even research. It's entertainment. They're the guys on CNBC in the
They're
afternoon.
still on CNBC.
Yeah.
Yeah.
So
those guys were on CNBC when I used to do CNBC, like when I was in my 20s. Like, they're
told
still
you.
on there.
I told you my theory with Nathan. I think they pay Nathan extra to be permabear.
Is he a permabear?
Oh, he's good at it. Like, he's always taking the bearish argument, like the other side. I think
they
gotta pay him extra.
On the TV?
Yeah. That's
Really?
like his thing. Yeah. Everybody's bullish. He's talking about how Nvidia is overvalued or something.
I'll tell you something about Dan Nathan. When I first started doing
TV,
TV,
there's value in that. There's value in that. So.
Listen, when I was 28, 29 years old, and I first started doing TV, Dan Nathan, like, he would give me like advice. He'd be like, he like kind of, he helped me out a lot. I don't forget that. I remember that. Not everybody in my life has gone out of their way to help me. He certainly did. So I got no beef with Dan Nathan.
Seems like a great guy.
He is a good guy. I've had dinner with him a whole bunch of times. Good egg. Yeah. Adami, I don't know very well. I did some TV with him a few times. I remember talking to him. I was like, oh, yeah, I'm going to the Hurricanes game. I was like traveling. He looks at me. He's like, you don't have kids, do you? I'm like, nope.
Yeah.
And now I realize why he said that, right? Because I don't do those things anymore. And he was in my position then. It's pretty funny.
He's got a bit of a creep vibe, right?
Who?
Doesn't matter. What?
No, I mean, both of them very nice to me. Dan Nathan really helped me out a lot when I was really young. So shout out Dan Nathan. So anyway, back to the yield curve and the recessions. We'll get in Louis here. What it means to me, Fed cutting rates, what it means to me, probably nothing. If anything, stocks tend to do well way more often than not after the first rate cut. And then the yield curve inversion situation, to me, it says buy bonds, and that's what we've been doing. So, I mean, that's how I see it. Am I crazy, you think?
No, I'm into it. Listen, we're buying bonds. We've been over it. Are we buying stocks right now?
You got to diversify your bonds. Lou Dog, bring in Louis.
Stocks is a tougher question. Are we buying cryptos is an even tougher question.
Bring them out.
It's looking toppy out there.
What up, guys? How's it going?
Lou Dog, I appreciate you being here, my man.
Good.
We got a big jobs, our most important jobs number of all time came out this morning. Stock market seems to like it. Crypto assets seem to like it.
Bitcoin likes it as well. Bitcoin likes it.
I've been talking to some foreigners lately, Louis, and these foreigners are very much interested in what's happening in the U.S. economy. They're interested in U.S. data, whether they trade foreign equities, whether they trade cryptocurrencies. The U.S. sort of economy is what's front and center around the world outside the United States. Would you agree with that as a fellow foreigner?
I certainly do. I mean, how's it? How can you not talk about it if you're a foreigner? Just how?
What would be number two? What's the second most important country in terms of what's happening?
I mean, it has to be China, right?
Is it?
Surely.
I know, but can you believe anything these liars are saying?
A little bit of doubt.
I know, but they're communists and they lie a lot. So, like, how do we even know what's going on?
I mean, I know that, like, in this area of the world, everything goes to China. Our economy is heavily impacted by China. Same
So
with Australia.
whether they're full of
they
shit or
export
not,
all their...
whether they're full of shit or not, it matters.
Yeah, exactly.
Okay, what about outside of China?
Gun to my head, probably Britain.
Britain.
Yeah.
And not Australia because they're next door.
Yeah, we won't talk about the Australians. You know, there's a little bit of a friendly rivalry between the Kiwis and the Australians.
Yeah.
You know,
All
I
right.
remember you used to give me shit when I went to the States for the first time, and you would be calling me like an Aussie, and I'm like, JC, stop
I
it.
would call you an Aussie. I would never do that.
You did it. You know,
Didn't
that's
I
the most
apologize for that.
that's
I
the
take
most
it back.
offensive
I'm
thing that you
sorry
could
for
ever
that,
tell a New
Louis.
Zealander, that they're
That's
an
better than
offensive,
that.
man. It's offensive.
I'm better than that. I'm sorry, Louis.
Aussie.
I'm sorry. I'm better than that. All right. Talk to me about cryptocurrencies. Louis, seriously, one moon.
I mean, look, every time I've been on the show for the last, weeks, if not months, I've literally just been saying, just patience, just wait for the market to shape up. It's I've got a bit of a funny story. So I was on a bit of a road trip today, and it was a long road trip, right? And so I need to rest my eyes for a bit, just have a little bit of a nap on the side of the road. And then that ended up with like a potential carjacking. Like someone opened my door and tried to get me out of my car. And so it's like the best nap that you might, the best nap isn't necessarily one on the side of the road. It's in your bed. So similar to this, it's like sometimes the best trade isn't always being taken, and so you just want to be a little bit patient with these things. And so
That's some analogy, huh?
What?
That is. Hold on. What's the crime like in New Zealand? The crime's non-existent, right? You don't have hoods
It's
in
pretty
New
much
Zealand, do you?
non-existent, so that's why it surprised me. I was like, you know what? I'm just gonna close my eyes and just rest my eyes. And then this
You guys,
guy
hold
just
on.
came up.
Do you guys have like a hood in Auckland or no?
I mean, we do, but I tend to stay away from those parts.
So you guys have real hoods?
I mean, not like, I mean, we're going to Chicago, so nothing like that, right? And so, okay, so the point was that sometimes the best trade is necessarily not one that you take right now. So just like me in that situation, the best nap I probably shouldn't have taken right there. I probably should have waited an extra few hours till I got home. And so just wait for the market to set up. It's a little bit of patience is required. A little bit of short-term shape needs to be put in. I've been pointing to this 56,000 level in Bitcoin, and the market is still meandering around there. It's nice to see that the market's up a little bit following these job numbers. But that's really the level, 56,000. That's the key level of support. So long as we're above there, the price is higher. As far as I'm concerned.
Louis, can I give you another analogy there? You should let your environment dictate your actions. The side of the road.
You see, that's a more elegant way to put it.
The side of the road is not the environment for taking a nap. Okay, it just isn't, right. It take a nap at home, right? So that's what I learned from this story, and I'm glad you're okay. Sheesh.
When you have as many kids as I do, you don't take naps anymore. So I forgot what those things are. I used to love naps so much. They were good. Big fan. Louis, can you throw up the NASDAQ Bitcoin correlation?
This is really the chart right here.
You guys have a good weekend. Give them hell, Louis.
So, what happened over, June and July was that the correlation between equities and crypto just completely broke down, and it even traded inverse to each other. And that's really quite different to the historical trend that's been there in place. The historical trend is that stocks and crypto have been correlated. In June and July, it was the opposite. Now we've sprung back up into positive territory. So what does that mean going forward? It means going forward, you want to be paying attention to what's happening in the equity markets. You want to be paying attention to what's happening in the NASDAQ and the S&P. If the S&P is moving lower, then that's going to be dragging Bitcoin lower with it, which I know that sounds really obvious when I say that, but it actually hasn't been, because over the last few months, it's actually been very dislocated. And so I think particularly with a lot of cryptos and tokens at key levels of support, you've got Solana at 120. That's another big level. obviously Bitcoin at 56,000. The direction and resolution in the short term is, very going to heavily depend on the next move here in equities.
Is it splitting hairs, Louis, to say pay attention to the S&P or the Nasdaq, or is it really just one and the same in this instance?
Yeah, I mean it's one and the same.
Okay.
I think if you're going to look at any, I'd probably look at the Nasdaq just because it's more growth oriented, and obviously crypto is just an infinite growth asset.
You got the Nasdaq on the chart there, which is why I asked. So
yeah.
Okay.
Yeah, what up, Steve?
How are market internals looking? Talk
shocking, absolutely shocking. The average. Here's a question. I put this in one of my notes this week, so this is more of a test of whether you actually read my research. But what's the average drawdown from the 52-week high of most tokens? The average drawdown at the 52-week high. If you're going to guess,
it's north of 60%.
Spencer?
Oh, you're asking me? I would have said like 50.
It's got to be around 60.
It's like 65%.
Yeah.
Okay.
And so Bitcoin is about 20% off its highs, approximately. The average token is 65% off its 52-week highs.
That's hard to even call that a correction at this point, though, isn't it? I know it doesn't matter, the words that we use for these things, but
I mean, they've been obliterated. They've been absolutely obliterated.
This has been a bear market.
Yeah. It's been a stealth bear market. I don't think people really understand how these things have been impacted. And so, I mean, you could look at this in two ways. You could say that it's a raging bull market. Maybe not a raging, but it is still a bull market. And you got a lot of these cryptos that have just been absolutely, cut in half, and in most cases more than half. Yeah. Is that an opportunity? Is there a bit of a dislocation that you could see a bit of a catch up, or is that more of, hey, this asset class is terrible, just completely avoid it? I think the answer lies in the middle. I think you want to. I think there is a bit of a dislocation there that could represent an opportunity, but then you want to see the momentum. You want to see bases being carved out. You want to see new highs, and that would be the entry.
So this could be one of two things, I think, at this moment in time. Either like you just said, a massive, awesome catch-up trade, and this is probably a great entry point, right? Mm-hmm. Or, and then in that case, cryptos, Bitcoin, play catch-up with the stock market. Mm-hmm. Or Bitcoin completes this top, all this weakness, 65% average drawdown beneath the surface. That was just evidence. That was the first clue, the signal that maybe risk assets over in the stock market are in trouble too. Right? Bitcoin could be the warning sign here if it rolls over and tops out, and we can look back.
That's an interesting theory. I mean, and so you're saying that cryptocurrencies lead stocks? That's a bold claim.
Chris Ferrone said it here, head of research at Strategist. I got it from him.
That's a very interesting conversation. It's very intuitive.
That's right, Todd.
That's right. Or counterintuitive. I mean,
no, it's not so much that they lead. It's that if Bitcoin were to complete a top and start, a new primary downtrend, that would not be a bullish development. It would in fact be a bearish development for risk appetite and the stock market.
I think Todd Sohn's in the back there, and he's a bit confused with your theory, and I kind of have to agree with him.
Bring him on. I don't think he's confused.
We'll get to Todd in a minute. First, let me bring Kenny on real fast for like 2 minutes. See what he's trading, and then we'll get Todd on. Okay. Kenny, where you at? You around here? I think he's around here. Yeah, he's here. Okay. Bring Kenny on in 3, 2, 1.
It's been a long time coming. They ain't cuffing my clock, they tug it. Putting up numbers, 99 problems, and I still kept it 100. Hold up. Yeah.
We got Kenny and Louie.
What up,
guys?
This is the first time that we've had a bit of a collab between Kenny and myself.
What's up, man? I feel like I
What's
should
up?
have a fancy accent. I'd lack that.
I
I'll go
feel like
Brooklyn
my
for you.
accent is the opposite of fancy. This is like the most ridiculous accent that you could ever have.
To me, it makes you just sound smart. It does. You need glasses,
I
and it's just
appreciate that.
the perfect scenario. Glasses, accent, and then you got me here. What's going on?
Kenny, what are we doing today?
I've already bought the Qs and shorted UVXY. It's the same day every day. Economic data is already priced in. We all knew what was going to happen. Blah blah blah. What's going to happen with interest rates, right? Once the news is out, you get the reaction candle, and you react to that candle. And as long as we're above the VWAP, the shorts not going to like it. Kenny, you told me to get involved as soon as the market opens. So what do? You know the economic data is priced in. The UVXY is going to crash. As soon as the UVXY starts going, it's the all clear signal to start buying the Qs. And here we are. It's the same day over and over again. And when you trade price action, you start to feel all the noise start to drift away. And then all you care about is price, and it's glorious. How's your morning going?
Not as good as yours, clearly. I haven't bought the Qs or shorted the UVXY yet today. So
Right. So far so good. We made a day's pay. Now we ease back. I'm flat again. So again, I should have held some UVXY because that just continues to disintegrate. So let me tell you one more time about what this UVXY product is. It tries to reflect the fear of the moment. You know what happened on August 3rd, 4th, and 5th. It exploded to the upside. And within 10 or 15 days, it went from $65 right back to $22. It tries to reflect what's going on in the moment. And the only time you see this go up is when there's massive amounts of fear. So when economic data is about to be released, that's an anxiety moment. And when the anxiety passes and nothing's bad, which is usually the case, this starts to disintegrate. So just get yourselves a borrow if you don't know how to locate it. It's one of the easiest trades there is. And also it's an indicator. So as long as UVXY stays in this downtrend, it tells you the market's probably going to be healthy today. But if you come out and just short it and you play that immediate pop, you're sitting on a day's pay already. And now we could go back and take a look at some of those earnings reports like Broadcom and some of those other big names, because a big fan of Broadcom.
Broadcom's still down, right? We're still down here this morning.
Well, if you were awake at 5 o'clock in the morning, you got the blue line break, and it's been a nice trade. So I wait, again, if it's made this a big enough move before I wake up, I'll wait to see if it tests that 140, 150. So right there. And again, we're right in the driver's seat. But, this week, these last 10 days have been pretty exceptional trading. The market was a lot more alive than I ever expected it to be over these last 10 days. It's notoriously a slow time, but you had Nvidia and you've got all this economic data and everybody's on, little pins and needles. Right now, it looks like the market, it's just standard as it goes. We're just bullish consolidation, and we'll see where we go after this next range consolidation, because the Qs are just in a 20-point range right now, and it's fantastic. And I'll tell you this, I know somebody said, you got a very selfish attitude about the market. If the market stays in the range that it's been in for the next 10, like we just witnessed for 10 days for the next 2 years, us traders will be just fine. This is great action, lots of opportunity. And we don't have to have a raging bull market, or for that much, we don't need a market that's going down every day. That's kind of depressing also. But this action, phenomenal. You got those chip stocks, you got your space stocks, you got the earnings reports, and you got your Qs and UVXY. Come and hang out with us, because our days are freaking filled with activity. And by 12 o'clock, we're napping. I heard you guys were looking to take some naps. We nap. We're old, 52 years old. By 12 o'clock, I'm done my trading. I'm fading out in the chair. So
I was napping on the beach yesterday, Kenny. I can't recommend that enough. That's why I love Kenny's room, because good market, bad market, there's always a trade to be made. Hitthebid.com is where you can find it. Kenny,
yeah, we're also looking at DocuSign. You want to see a chart?
Oh, DocuSign.
Yes, I know.
I haven't heard that name.
You want to see something crazy? Here, look at the 3-year chart on DocuSign right here.
That's a takeover target if I've ever seen one. Hey.
Friends, I've never been bullish this stock in my life. I am bullish this stock right now. So if it could sustain this rally above 57.50 and build from here, you got the makings of a 3-year VWAP possibility break. So I'm a fan. I can't believe I'm even saying it, just like I saw the reaction on your faces. But if it can sustain a rally after an earnings report and it gets back over the 60, look at this monstrous spot it could get to. Above 64, you could be looking at $78. Now, again, I can't believe I'm saying that either, and it's a big what if. But if it stays strong today after an earnings report, it's pretty bullish. So I'm watching DocuSign and Broadcom.
I think this is the first time I've ever seen Kenny look at a 3-year chart.
Yeah, I'm always with 3-year charts are my favorite. Yeah,
I love it.
That's where I find that stocks coming out of those bottoms.
Thanks a lot, Kenny.
All right, good luck and be careful out there.
Always look both ways. All right,
that is
let's
a nice
bring
base,
on.
huh?
That is a nice base. Yeah. Well, I mean,
get Mr. Sohn on here.
It hasn't started the upward part yet, but yeah, we got Todd Sohn in the house. Louis, you want to hang out? Feel free to.
I need to shoot off. It's getting a bit late, so you guys enjoy your conversation with Mr. Sohn.
Peace out.
And have a great weekend. Later.
Todd. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, buddy.
My beach babe.
So tell everybody what happened. I was so excited.
Let's
put our pool picture on the show the very next day. How did that happen?
It was the odds of that happening were rare.
Yeah.
For everyone wondering what the hell we're talking about, I was on a family vacation in Florida, and I turned around at the pool, and Steve was there.
And not even like where I live in Florida. I was 5-6 hours from my home too. So it was just a very strange, small world coincidence. The universe is bringing us together, buddy.
What does it mean?
You feel that? I know.
Yeah.
So JC was like, I can't believe that was a coincidence. I was like, maybe we planned it. Maybe we're working.
Fate. Yeah, it was fate. It's fate.
All right, good. So listen.
What
What
do we want to talk about? What's on the mind?
I mentioned your pal, Chris Verone, when he was on here. He was saying if Bitcoin breaks down and this is some sort of top end to the bull market for Bitcoin, that would be a bearish signal for risk appetite and the stock market.
Yeah, I think that's fair to look at crypto as a piece of the risk appetite puzzle, right? Because why else? Somebody save Steve. Anyway, so you look at crypto. What else is more risk-seeking than that asset class right now? I get it can be a diversifier, it can be an alternative within a portfolio, but given the volatility that it historically comes with, I just think that you're not buying that if the conditions in the macro environment and the liquidity environment are deteriorating.
All right, sorry, crypto gets me excited. Went down the wrong pipe.
No, that's kind of our house view here. That was where crypto stands, and it all depends on your time frame too. Like quarter to quarter, yeah, it makes sense. If you're a long-term crypto bull, then you just have it sitting in your portfolio at whatever allocation. But if I'm looking for hints, so I look at that. I look at staples getting a bid here. I look at healthcare getting a bid here. Semis have deteriorated. Broadcom, I don't know how much Broadcom down right now pre-market. So there's these little pieces that are starting to add up in the risk spectrum bucket that leave us a little hesitant for the fourth quarter.
So does losing leaders like Broadcom or God forbid like Nvidia, if that were to happen, that is something you would weigh a lot for the risk appetite picture?
Yeah, I mean, semis are one of the most important groups out there, influentially on the benchmark because they're 11% of the S&P 500. And in terms of cyclicality, right? Semis are super cyclical. Yeah. So if semis deteriorating, that means high beta's deteriorating because they're very influential there. Discretionary has been totally mixed. Discretionary versus staples has been nothing. So it's a little bit more nervousness, I think, than we've had in quite some time. Right? There's actually a bid for defensives here, and rates seem to be leading that lower.
Are all these nice reversal patterns in bonds? Is that defensive? Is that risk off, or do we overthink that? Do you put that in the risk appetite kind of conversation that we're having?
I think that's fair, especially if the pace of the move in bonds is going to be fast, right? The pace of the drop in longer duration yields might be a little bit more worrisome.
Yeah.
I think buying bonds, like, that's just how some people think, right, as part of a portfolio. But if the rate of change on yields, when that starts to get extreme, that tells me that there's something up here. Especially when it's accompanied by a bid for defensives.
Right.
And consumer staples are kind of there too. I would watch so I always like to look at consumer staples relative to the S&P, and then what are corporate spreads doing? When corporate spreads start to widen out, you get a bid for staples. So BAA spreads, high yield spreads, they've tightened since the early August blow up, but I wonder if the low for the cycle is in.
I think at a certain point, the list of this new bearish evidence is so long that you just don't overthink the bond stuff, right? Because it's yen, it's gold, it's staples relative, it's utilities relative, like it's all of it. It's all of every defensive
it's all
trade.
there. The hardest part about all of this is that the equal weight S&P and the cap weight S&P are still in uptrends, and pretty good uptrends, right?
Right.
But so if you're just looking at surface level stuff, you're like, the market's fine. We're still well off the lows. We're still above the 200-day. But in the stuff that we look at, the evidence at the crime scene is starting to add up here a little bit in terms of some more volatility and a larger speed bump into the fourth quarter.
So you're bearish.
I don't know if I would say bearish, but I am very much nervous.
Okay. Do you feel more cautious, or that more caution is warranted at this point than any other point in this cycle?
Yeah. I think that's totally fair. In the last since May 2023, when we had the regional bank blowups, and then the market just ripped after that because whatever reason you want to call it, definitely the most nervous, this is different than any time since then.
Yep. I'm with you. So then, is it just price then that you need to see to confirm all of this? Like, what turns you more bearish? What makes you start thinking maybe this bull market is over?
Yeah. So I am watching that equal weight S&P.
Okay.
If this turns out to be a major head fake, where we've had a good run, if this turns out to be one of those false breakout type scenarios and the equal weight S&P rolls off, then that's going to be troublesome. If discretionary staples breaks down, and then also internally, right? How many stocks are above their 200-day? I think we were at 70-ish, low 70s last night.
Yeah.
That's fine. Totally fine. But if that starts to probe into the 60s, and then we can't hold 65, and then we have struggles holding the 60, that says, okay, step aside for however long until I'm going to guess the election is the catalyst event here.
Yeah.
Because it always is. Not that I don't particularly care for politics, but that's usually a catalyst of like a clearing event.
Would it be too easy if the market were just messy and we saw a corrective wave that lasted up until the election, and then it was like all systems go, green light again? Like, is that too simple?
I think it's too simple, but I like it because it's been the playbook. Good, right? The last two elections, that was the playbook, right? And it was kind of totally different scenario last year, but we corrected into late October and then just took off again. But I don't. It's too simple, but I like it.
Whenever there's scenarios like that, even like a chart pattern that's like too clean, it's like it's too good.
Yeah, like there's probably a wild card that we're not thinking about.
It'll be like a war or a pandemic thrown in at some point.
Of course.
Right. Okay.
So
listen. So RSP, equal weight S&P 500, currently stronger than cap weighted S&P 500. And a lot stronger than NASDAQ 100, just in terms of making a new high recently here. Right. Are you surprised that the S&P is actually holding up as well as it is, though, because of the weakness from the biggest names?
Well, this is all about the bench, right? Financials are holding up very well. Healthcare is working.
Right.
Some discretionary, you have the home builders, and real estate. So when you equally weight those things, they don't have any influence in the cap weight S&P, but when you equally weight those, that's still a fair amount of constituents that are rising.
Yeah.
Tech is the one that is having some issues right now. And it's not like they're completely broken, but they have definitely wilted. So that's why you're seeing that divergence where the equal weight is stronger than, say, the NASDAQ 100 for now.
Yeah.
For now. So if I'm looking for stuff to play, I really like healthcare. I mean, healthcare is totally out of consensus.
Yep.
Financials are still acting well. That's okay. And then real estate, REITs have had the best opportunity set in roughly 2.5 years because they've been awful. Now they finally have got a bid here.
Explain what you mean by opportunity set.
So REITs peaked back in late 2021. We've had this whole commercial real estate debacle.
Yeah.
They spent, the majority of the REIT names spent 2.5 years in major drawdowns. They finally bottomed out in late 2022 or 2023. Spent the last year basing and now have finally got some momentum behind them. And so if I'm a REIT manager, if I'm just looking for opportunities there, you're starting to see all those breakouts. Whereas it was a bear market for these 2 to 3 years. Can't touch them. And now if you just do an eye test on REIT names, you're like, okay, here's bear to bull trend changes. And that's what I'm saying about the opportunity set as being the best it has been in quite some time.
I love it. I couldn't agree more. There's some monster bases too.
Yeah, this is where technicals and market analysis, you can bring up all the statistics, percent of stocks over 200-day to 50-day, but you have to do the eye test too. You got to look at these names and say, okay,
yeah, they look good.
I see 80% above 200-day, and the names look good, right?
Not only is it just like above the 200-day, like you look at these charts, and so many of them look just like XLRE. They're fresh trend reversals. They're like brand new uptrends. No?
Yeah. Yeah, that's the way I'm looking at this. So I love this idea of anything non-tech have been, using that word you said, fresh trend reversals. They have done nothing for so long. Yeah, maybe they're a pinch overbought in the near term. So like, if you're talking to Kenny, maybe he doesn't like them because they're not day trading patterns right now. But if I'm a longer term allocator, then yeah, I'm looking at all these things that have been terrible for so long.
And you got interest rates rolling over, and it's a bond proxy group, so that works. And sentiment is not nothing here. Like you alluded to, sentiment. Yeah. I mean, this is what you want. This is the kind of thing that you pay attention to sentiment.
There's articles every day about real estate imploding, and maybe it does at some point, but the stocks don't trade like that.
No, but this is supposed to be the group that like crashes the market and all this scary stuff. And look at these beautiful charts. So.
Yeah. Simon, I've seen in the chat here. Simon Properties, another one. That's real. That's retail.
Yep.
And that's been one of the strongest ones. The retail apocalypse.
They own literally like malls, right? Like,
yeah. I think they figured out that maybe we just don't need stores there. Use them for friggin' other random things, parties or pop-up type stuff.
Whatever they're doing, the market seems to like it. So it's good with.
So I look at the retail names. I look at the residential names. And now some of the big tower names are finally starting to improve too as rates come down.
Like the office REITs?
Office REITs, I think it's you here in New York, we're always worried about office REITs, and they finally have turned the corner.
Todd, how often do you think about the Russell 2000? Like, do you think about small caps?
I've been thinking about them more frequently. They just can't get out of their own way.
Okay, yeah. Still a mess?
I mean, listen, the stat I go into with every meeting about small caps is it's now been 710 days since the Russell 2000 last made a new all-time high. That's the same category tier as the financial crisis and the tech bubble. So
that's pretty bad.
It's been terrible. Now they're clearly off their low, but they just can't get out of their own way. There are good small cap products out there that are actively managed or have some sort of filter on it, so you can get rid of all the crap.
Like what?
I mean, I look at GSC is a favorite of mine. That's a Goldman active small cap ETF, and it has outperformed the Russell. They know the stocks and the industrials that have worked. They know the stocks and consumer discretionary that have worked.
So it's like 1,000 shares a day. Great. Okay.
Yeah, I mean, listen, it's not trading like the Russell ETFs do. But if you were like, I need small cap exposure, you'd go the active route. You'll be much better off. But if you and here's where we can tie this in. If yields are telling us something that there's wrong with the economy, that's out of my wheelhouse. But if the economy were to really deteriorate here, that's actually when you want to start to add small cap exposure because they outperform coming out of weakening economic environments.
Really?
It's a little confusing. Like small caps outperform out of bad economic environments because you usually buy all the crap.
And also, like when a recession comes, it's usually mostly priced in by the time it gets here.
Yeah, exactly.
The market already dealt with it.
So you might be really early in terms of small cap outperformance, but it's on my radar for something to look out for. But also just on the absolute basis in terms of participation. Like it's just been so long time coming for small caps to finally work here. It's also benchmark problems though, that regional banks, they have great weeks, they have terrible weeks, and then biotech is a lottery ticket.
Todd, would it be like strange, historically speaking, if the bull market ended and small caps never even like completed a reversal? Like they were never in an uptrend?
Or that they continue to go down, or they just float nowhere, right?
Like so when you look back at past cycles, like is small cap participation like a must or an always, or sometimes do you just not get it? Because I feel like it would be strange.
I want to say the tech bubble was kind of similar to this, and then they eventually puked with everything else,
right?
And outperformed coming out of that. But that would be my comp, as extreme as it is.
Yeah, they didn't do much while the rest of the market was doing great.
But banks, I think, if I remember correctly, or financials in general, were just this huge oscillating range back in that environment. And that's why they outperformed on a relative basis. They just went nowhere on an absolute basis. But I think it would be weird if small caps did not go on to make a new high here at some point. I mean, just I don't know. But the other, the other thing I keep in mind here is the structural idea that, and this is not original from me, but all the companies that go public, companies wait to go public now, and they don't come out at $1 billion or $5 billion. They're coming out at 50 billion.
I know.
So, and that's almost a detriment to small caps because by the time these companies go public, they're not a small cap name anymore.
They don't get any of the good ones. It's sad.
Yeah, I wonder if that's like, there's a small sample size, but it's kind of an interesting thought to me that the Russell is just like missing out. It's like a guy coming out of high school and the team grows them, but now they're just completely finished products when they are coming out of college and high school and all that stuff.
And I wonder if there could be some form of an election tailwind, right? Like small caps really outperformed coming off of the election last cycle.
Yeah. So what happened in 16 and 20, the election clears, and then the market just ripped in all sorts of forms, financials, industrials, small cap. It's just a big clearing event.
In 2020, we had like a buy everything rally.
Yeah. And I know the election happened to happen right around the vaccine stuff came out. Pick your reason, whatever it was.
Fair.
But there's these anxiety events for a lot of people, as much as you and I may think they may not matter. The truth is it causes a lot of investors anxiety. And once that information is finally out there, the market calms down and tends to rip.
I like that anxiety event. Yeah.
It's true. Watch the VIX. VIX, huge spike last month. You're still hanging around 20. Can't imagine it stays there that long.
Do you pay close attention to the VIX always, or just times like these?
Times like these. I mean, whenever you get a big VIX spike, unless we are going into some crisis environment that's going to last a long time, VIX spikes have to be bought. Stock-wise, equity-wise. You buy stocks on these big VIX spikes.
Now, if the VIX starts spiking like this a lot, I mean, these were the two biggest updates for the VIX since, you'd have to go all the way back to like November 2021. And we've had two monster moves. We had another one, just Tuesday, I guess?
Yeah. So when I see the VIX get into the top decile, to me, that's usually a big signal to buy. If your time frame is 6 to 12 months, by the way. If it's 1 month, then maybe that's a little bit more of a toss-up. So I look at this from a little bit longer term perspective that, okay, if the market's freaking out and the VIX is really spiking here, getting into the 30s and 40s, that's when you want to be nibbling at stocks, allocating the stocks. There will be pain in the next month or two, though.
I want to show you a chart about semiconductors.
Let's see it.
Do we have that chart, guys? Yeah. Does this scare you?
Does the rate of change scare me? Not necessarily, because I know semis are volatile. Does the potential trend deterioration scare me more? Yes.
Is this like a chart crime? Am I just doing drawing arbitrary lines?
No, I don't know. I mean, listen, when anytime you start to get back to March 2020, it's that you're in extreme territory, because that was one of the most extremes in history.
Well,
I don't love how if you made this relative to the S&P or relative to the equal weighted S&P, that would be more concerning to me, because semis are ceding leadership.
Okay, so let's talk about that. How bad would that be to lose semiconductor leadership? Ultimately, so how bad is it, or how bearish, if the cycle leaders are no longer leaders?
I don't love it. I'm not a fan. I
Yeah.
don't love it.
Yeah.
But that would also tell. Okay, so on a relative basis, that tells me get more defensive, and then on an absolute basis, that says time to focus on equal weight type stuff, because if the larger weights are deteriorating, that should favor the smaller bench type stuff, unless those are declining too. But yeah, the cycle leader declining is not great. That's not great.
So I just pulled it up on a relative basis. It looks even worse.
Yeah.
The three worst days, if you look at SMH SPY, the 3 worst days since 2014 on a relative basis have occurred since July 17th.
Yep.
You go back 10 years. And they're clustering.
When I look at flows have been all in on tech, and flows aren't a signal, but the positioning there is certainly aggressive, right? I mean, you had 2x Nvidia, that was a $5.5 billion ETF. That means it was in the top decile of all 3,000 ETFs out there.
Yeah.
That's extreme to me. Good,
Yeah.
I mean, product if you know how to use it, but very aggressive.
If we look back, and this was a top here, we say that was a pretty good run for semiconductors. Now,
yeah, semiconductors went from 2% of the S&P to 13% at one point.
Wow.
In a decade, right?
Wow.
I mean, a lot of that's Nvidia, of course, but also Broadcom, AMD, and Micron. And so these things, you go back to the 90s, you look at some of the rallies and corrections in semis, they were upwards of 50%. Now, they're clearly more developed and more important to the world today, but man,
you could argue that they should have been higher beta back then, no?
I think they were higher beta back then. And that be like if you plot S&P high beta versus S&P low beta, and then semis relative to the S&P, it's pretty much the same chart.
That's a good point. Yeah.
And they both have deteriorated here. I'd love to see them get back on the saddle. That gets us all more bullish and constructive in the environment. But for now, it's telling you, hey, take your foot off the gas. Right?
All right.
Now it's just a matter of trend deterioration from the broader market, I think. We're not quite there yet.
You think it's going to be a Solana Saturday tomorrow?
What's a Solana Saturday?
It's when Solana goes up when the market's closed.
Is that a thing? I don't know. Crypto, I'm not big, outside of market signals, I don't know my crypto that well.
You got to get a Coinbase account and get yourself involved.
There was the fish that was dressed like a pope. That was one of those things.
Yeah. We need JC here for this bit, because he knows all the meme tokens. I don't dabble like that. I'm not crazy.
Yeah, I'm a Bitcoin ETF guy if I'm dabbling here.
Was having this conversation with someone the other day. Why would you own Bitcoin in any other way at this point? I love you, Coinbase. Don't get me wrong, but like, I'm gonna own it with BlackRock in my Fidelity account.
Yeah, I think it depends on your view of the world. If you're one of those guys who's like, the government's out to get us, then you're owning it on off chain or whatever you want to call it. However,
you're absolutely right. So,
but for me, I'm buying it on a brokerage account in an ETF.
Yeah, absolutely.
Because I go bowling. I put the rails on the side when I go bowling.
Yeah. I was bowling in the arcade at the resort.
Oh, yeah,
Yeah.
no, I had to avoid that because that arcade became very expensive with my children.
It became very expensive with me and my girlfriend. And then when I left, I felt bad that I didn't give you the card with the leftover for the kids.
Oh, yeah.
You know what would have happened? It would have been nice, but you would have ended up spending a lot more money than whatever.
They would have liked that card.
Yeah.
Uncle Steve. I would have called you. Start calling you Uncle Steve.
It was so nice getting to meet the family. We got to do that again.
They were confused. But glad.
Well,
Glad to see.
I was confused too. I was like, I like blinked twice to make sure it was really you. So, all right.
Lay it on me.
I don't know. What else is on your mind?
What?
Any thoughts on dollar? Like, did you have thoughts on dollar index, Dixie?
Dollar noise. Oil's terrible. Energy stinks.
Yeah.
I really like healthcare. And the basic resources names, BHP, Rio, Glencore.
Yeah.
Pretty. Not pretty. I don't know if that's a China thing. China's been a terrible investment. Those are permanently interesting charts because they're huge ranges over the last decade plus.
Yep.
And they continue to torch.
Yeah. They can't get out of their own way. You see the failed breakout in XLB too.
Yeah. Just there's just nothing there.
What sector would you say looks the worst? Like, what sectors would you like? Healthcare. You like some of the defensive stuff. Looks good. What would you stay away from here?
Is it energy?
I mean, energy's been nothing but opportunity cost for years now, right?
Yeah. I mean, it had a great run during the inflation boom, a year or two ago, and now it's just like I can't get its act together, and it's opportunity cost. That's the perfect word for energy. I think it might be that. I don't love consumer staples outside of the big names. So like Walmart, Costco, Coke, P&G, Colgate, Mondelez maybe are all good. But then when you start going down the cap scale and staples, there's still a lot of problems there and a lot of messy stuff. So it's not like staples are all in. I think that's interesting. But yeah, energy, I'm just trying to think of the sectors in my head here is the most is the grossest. And there's not a lot of great stuff in materials either.
No, there's not.
So
commodity stocks, just super messy.
Just an awful. Outside of gold, not a lot going on there.
You like gold though? How can you not? Right?
I mean, hey, how do you not? If you're a chart guy like us, how do you not like gold?
Yep.
The one thing I cannot understand, and there's been articles written about this, is why no one buys gold ETFs. I cannot figure it out for the life of me.
Why no one buys them?
Yeah, well, so like there've been no flows.
There's a lot of assets in there. Maybe no flows.
Yeah. I'm talking about the flows over the last, call it 12 months. There's just been no appetite, and it's really strange to me. I would have suspected.
Isn't that bullish? That's bullish though, right?
It should. Yeah, ideally it is bullish, and it's worked out. I just have found it weird that gold has worked. It's been strong, and there's not a lot of money chasing it. I don't know if that's because equity's been so good, because you can get fixed income now and crypto. Maybe there's just too many alternatives.
Well, it's recency bias too. I mean, how can you not just buy tech stocks?
Yeah. Why am I buying gold when I can get 5% money market yields in Nvidia?
We'll talk about IoT. We'll talk about IoT in a little bit. We'll get to the earnings.
Money markets hit another record. What, $6 trillion? Too many alternatives isn't a thing, Todd. So
$2.5 trillion in retail money market funds. Whenever the Fed gets to 3%, that's all going to fixed income ETFs.
Perhaps, yeah.
I think that's what happens.
All right,
you like
Todd Sohn, everyone?
You like anything overseas right now?
I don't want to give up on Japan yet, but it's caught in this kind of hurricane of defensive market, and then European healthcare along with U.S. healthcare.
You in healthcare? All right.
I'm finally waiting for this thing to worth.
They do have some really solid pharma charts overseas.
Yeah, I like those. Outside of Novo, right? Outside of the GLP-1 stuff, Sanofi, Roche.
I was just looking at Sanofi. Do you see that base breakout right now? Oh my God!
Trying. Even Bayer, BAWNGY. That's a little something there.
Did you just give me a
BAYN, sorry.
Just give me a
BAYN face GY. That's the Bloomberg ticker that I have in my head. Bayer,
So
The
Bayer
more
AG.
letters, the better. I like it.
This is aspirin. Do I have that right?
Yeah, they're the aspirin people, and I guess they make the Roundup. Is that true? Am I thinking of that right? I don't know. The stock has had some trouble, but it looks like it has little signs of life.
They had some litigation. There was some litigation.
Yeah.
Something or
Yeah.
other. I'm not remembering what it was at the moment, but yeah, it was something like that.
Who's the croissant guy? I don't know who the croissant guy is. I'm looking at this comment. I like the croissant. Who's the croissant guy?
I don't know what you're talking about.
I don't know.
No, Todd Sohn, you look like the. I don't know who that is either.
I like a good croissant, but I like to also be known as Wall Street Seth Rogen, according to the compound.
All right. Thanks a lot, Todd.
Always a pleasure.
Always so fun chatting. Thanks, Todd.
Right.
Take care.
He's the best.
Yeah, he's
Carson.
Guy.
I don't know. All right. Hey, Todd Sohn, really one of the great guests we get to have regularly on our show.
Yeah, definitely.
Just such a pleasure every time. Anything interesting about our conversation? What stood out?
A lot of things. I mean, he kind of said it at the end, right? Where just the fact that he reinforced his healthcare bullishness was interesting to me. You know, he said he had to say it twice, right? So
yeah.
What else?
So nice how to say it twice.
Every day for the last like 5 days, we've had a good conversation with our guests about semiconductors, probably because it's top of mind right now. I think this one was no different.
They're very important. You know, semiconductors are everything to this market right now. You know, I think Todd was being a little bit, I don't want to say guarded, but he probably could have used stronger language when I asked him what it would mean to lose semiconductors leadership. But you heard it. Not good. Not good at all. Right? On top of a growing list of bearish data points, then you're going to put that one on. Oh, that's the cherry on top. That's nasty. I don't know. I really think it's prudent for us to start asking the question, was it a good run? Right? 2 years, Spencer. More than 2 years now. I don't know. We get greedy at the end of the markets. We get greedy. It's only human.
What's the word I'm looking for? It's like it's optimistic, but it's like cautiously optimistic. But it's also like I'm optimistic, but I'm skeptical, right? Skepticism is good. It's healthy to be skeptical always, even in bull markets, right? There's an old saying, and there's an old like journalism saying, right? Which is like, if your mom says she loves you, check it out, right? Just check it out. Right? Just be skeptical. Just be skeptical always, right? So I think that's perfectly healthy to be asking questions like that. You know, are we near the end? Yesterday, Ari Wald said where he thinks we're in like the what do you say, 7th inning? I think he says 7th inning. Of course, we don't know.
I like that. I like that.
We did JC's analogy was like, well, we don't know if the game's going to end in 9 or go to extras, which, you know, whatever. But let's assume it's a normal game. 7th inning means we're closer to the end than the beginning, right? By a lot. So
he used the extra innings analogy.
JC did, not Ari.
That happens.
Yeah,
that happens. Yeah. Too young to remember the options terrorist from the yeah. Thank God. I'm not a fan of terrorists, so I'm glad I missed that. Yeah. I think you're right, Spencer. And also, this is information too. Ari Wald, Todd Sohn. There are others. You know what? Let's get Ryan Dietrich on soon. First of all, I haven't seen him in so long. Let's definitely get Dietrich on. Because these are guys who are typically very bullish. And right, to be bullish. But they're sounding a lot less bullish than usual. Ari Wald saying it's the 7th inning.
Ryan Dietrich is like always bullish.
You know, when he has his moments.
I don't know who Kem Carson is. I'll reach out. I'll try to find him. Chad's saying we should get him on the show. I don't know this person, but doesn't mean can't get him on the show. So I'll do my best. Skepticism just for the sake of it, Tim, is stupid, right? But if you have data to warrant it, then I think blind skepticism is just as stupid as blind optimism. It's equally dumb, right? So, Matthew, I've tried to get Joe Fahmy on the show on several occasions. You tell Joe to respond to my emails, and I'll get him on the show. How about that?
What did Jeff DeGraff say about being skeptical or contrarian? If you're always contrarian, you're just an asshole or something like that. He's got a great quote.
Yeah, something like that. Yeah.
All right.
All right.
So did you see this ticker symbol in the freshly squeezed report from yesterday? Did you see? So this is the best ticker. Do we have the chart for FAT? It's somewhere.
No, the best ticker is not. Whatever you're referring to is not the best ticker, but it's okay.
PHAT, FAT. Yeah. They do like gut disease stuff.
Mm-hmm.
I think. I thought it was a fantastic ticker. No?
I'm sure it's good. It ain't the best. It's not my favorite, but I don't want to say my favorite.
I don't want
to say my favorite because then it'll. I don't know. This is a family show. It's a family show.
Is it? I don't know any family that watches this.
All right.
Say
my favorite is Build a Bear Workshop. There, I said it. You asked. I said it. Okay. That's a $400 billion company. $400 million company. That company's not so small. It's almost half a bill.
Oh, you crack me up. All right. Not Virtus Life Sciences. All right.
I don't know what that is.
Cool.
What's the ticker?
All right. Moving on from that. Fantastic. That's good. Jared Dillian is another good guest. Guys, everybody go watch that Off the Charts episode. Me and Sean had such a lovely conversation with Jared. And yes, I totally agree. I also think he's one of the great financial writers of our time too. I think he's right up there in the same conversation with Morgan Housel, the guys over at Compound, and all these great writers who are all guests on our show. We're very lucky for that.
Mm-hmm. Yeah. Speaking of off the charts real fast, the next episode I think will be live in like 2 minutes on YouTube.
Is it?
So
we have one this week?
David Lundgren, man.
He didn't go out last week? Great.
No.
Wow.
No.
What a treat. So David's episode will go up today. We wanted him on like the second week. He was one of the first guests we had in mind to talk to. So we finally got him on. He's one of my favorite people to talk to in the world. I think he is one of like the absolute best CMTs like currently out there practicing. There's a lot of great retired CMTs, right? But he's out there doing it every day, managing money. And I have learned as much or more from just a limited, conversations with David over the years. I've learned as much from him as anybody in this industry. So that was just another huge treat having him on.
Yep. So I will, as usual, I will give this episode of Off the Charts a listen when I go on my Saturday morning.
We could do a special CRL edition, dirty tickers only.
There's not that many of them.
Bring your dirtiest tickers.
You asked. Okay. As far as tickers that are on my mind this morning, we mentioned the Broadcom with the earnings, and it's kind of the same theme as AI yesterday, which we didn't talk about. But if you are in the semis or related to AI in some way, shape, or form, and your growth is not parabolic, it's going to come back to bite you, even if the growth is good. Yesterday's C3 AI report, like their growth rate is still like pretty strong, but they didn't raise the guidance, right? So the AI thing is working against them there, right? Yep. Because it's not parabolic. Or actually, it'd be this way, right? It'd be parabolic. So the stock got crushed, and Broadcom is kind of the same thing again today, right? So the stock is down on what would be considered an okay report, I think, in a regular environment. Not that this is regular.
It was probably a really good report. is the truth. I haven't had time to look at it yet, but I've been thinking even about the Nvidia report. Like, I know we were on here talking about it. I'm like, it wasn't as good. It was so good. Like you're saying, in a normal environment, something like that, just incredible. But it gets to a point where these leaders get priced for perfection. They get priced beyond perfection, right? And there's nothing that can be good enough. And that's how charts end up topping and rolling over. And Broadcom is now getting added to that list of, well, shit, it sure looks like a top. And that list, Spencer, is getting longer and longer and longer every day. I know JC comes on here. He makes a good point. There's no new lows. Well, I'm seeing a lot of tops. Seeing a lot of tops.
So that brings up the interesting question of, the new highs list and the new lows list, while valuable information, leaves out everything in the middle. If it's not making new highs but not making new lows, right? Where are you? You're sort of you're in no man's land, right?
Dude, it's such a good point. You got to look at the chart, Spencer. It's the only way.
Yeah, that's right.
Like, look, the breadth indicators are great. They are full of information. Some of the best evidence we have at the beginning of a cycle, and the end too. Not as much, not every time, right? But we get these breath thrusts. It's like the best signal, best thing ever. But there's really nothing that compares to simply just tapping down on your keyboard and looking at each chart one by one by one. And what you could start to do now, there's only 100 charts in the NASDAQ. And there's like 101, 102 charts, right? You could look at every one. It won't take you very long. And you could just tally. Like what I'll do, I have like a little pad. I'll go through. I'm like punching down on my keyboard. And I'm just tallying tops, bases, flags, uptrends, downtrends. That's it.
That's actually not a bad exercise. I've never done this, but it's not
5
a bad
minutes.
exercise.
5 minutes. Like just the eye test. Quick. Does it look like a top? Okay, mark it as a top. And you could make your own breath indicator that way. Imagine that.
Yeah. I wish I could remember who told me this years ago. Damn. But they said if you look at a chart and if you pull up a chart and you can't tell what it's saying in 5 seconds, you got too much shit on there, right? Like 3 seconds even, right? If you can't tell what it's saying in 3 seconds, you got too much crap on there. Clear it out. Too much.
Yeah.
Noise.
That's a great take, and I'm with you. Can you give me the IoT? Look, we need more from this for breakout multiplier. Is my initial reaction to this, right? Nice move, but not enough. I think we're in the 50s.
This is Samsara, right? With a great ticker IoT. Earnings out after the bell yesterday. Beat on the top, beat on the bottom. They gave some guidance for the current quarter that was above estimates. I think it looks like across the board. I don't know if and they raised. That's what they did. They raised their outlook for the fiscal year. Not by a ton or anything, but a raise is a raise is a raise. So every number was up for them. Either in line or above estimates between the earnings and the guidance. How many price target raises do we have this morning? 1, 2, 3, 4, 5, 6. I'm seeing 6 price target raises this morning. They're all playing catch up.
Look, the fundamentals here. We're trading options on this thing, but the fundamentals, we do pay attention. We do check it out. The story here is cool. Fantastic growth story. Tremendous earnings momentum, just consistently over the past several years. I mean, this company delivers really strong growth, good numbers. This looks good. Yeah, the street loves it. There's a lot to like about this company. It's not cheap. So they connect devices, from what I understand.
I'll be honest. I thought Internet of Things, which is what IoT stands for, I thought that was over like 2 years ago. Okay, I didn't realize that.
Yeah,
I didn't realize that, like, because IoT was like. Do you remember thematic ETFs? Remember how sexy those were like 5 years ago? IoT was like one of those like themes, right? It was
5G.
Everything 5G was one. Everything will be connected, right? Which is I guess is happening, but
there have been 5 Barron's cover stories about it over the years, at least.
Sure. Yeah. You could just Google IoT stocks. You'll get a whole Barron's does a lot of that stuff where they just will put a theme out and be like, hey, here's 5 IoT stocks, here's 5 AI stocks, right?
Some of this stuff though, some of this IoT stuff, you just practical, it's stupid.
Okay.
Like I'm
Can
sorry,
I tell you what?
I don't need to lay in bed, Spencer, and run my washing machine from my phone. Like I could walk my ass down the stairs and press a button. It's like the thing where you kick the car for the trunk to open. It's like put the bags down and push the button. The microwave that like you push a button and it's got to like open. You got to like wait for it. I could open and close a microwave. I don't need a button for that. Like some of this is like too much. No. No?
Yeah, no, you're right. Can I tell you what was a favorite IoT stock from a couple years back? BlackBerry. BlackBerry was an IoT stock. They have an IoT part of it. No, I'm not making.
Really?
Yeah.
Did
really.
you have a BlackBerry back in the day? Are you old enough?
No, I actually never had one, and then I'll never forget that one summer where it was like everybody in my life had a BlackBerry, and then all of a sudden, in the course of like a month or two, nobody had a BlackBerry anymore, and they all had iPhones.
iPhone came out right then and there. Yeah.
Yeah, and I know you watched the movie BlackBerry, didn't you? I only watched it like a couple of weeks ago, or maybe like a month.
No, I didn't. I haven't seen it. I have not watched it.
I thought you did. I enjoyed it very much. I don't forget what. Maybe it's on HBO. I have no idea.
It's just a story, like their story.
It's just a story of research in motion. Yep.
Canadian guys, no?
Oh yeah. Outside of Toronto, right?
So
I enjoyed it. Good movie. Good story. Anyway,
I will check that out. I always like these corporate stories.
Yep.
They could be fun. So this used to be ticker symbol RIMM. Research in Motion was the name of the company at first when they were making BlackBerries. They rebranded since. So we were in college and we were starting to like get involved with investing. Me and some of my friends, roommates, stuff like that. Like, it was a hobby for a bunch of us. And I had one buddy who was like cutting edge. His parents got him the iPhone as soon as it came out, and he loved Apple. And then me and my other roommate we were BlackBerry people. So we're like, no, we're going to own Research in Motion. And I owned that stock for like 10 years. Like I told it not long ago. If that was Apple, like if I was my buddy, if my dad just got me an iPhone, I probably would have bought Apple stock instead of Research in Motion. I could be retired now. I don't know.
Yeah. All right. Hey, Fonz, you here? You want to come on for a few minutes and show some charts with us? I think you do. I hope so. I'm going to bring you on in a minute.
Fonz, let's go.
Hey guys,
What's up?
how's everything going?
Where you're in London right now? Where are you?
Birmingham in the UK.
Birmingham. Sorry, close enough.
Yeah.
How far is that from London?
90 minutes in train.
You're from London.
Right. Very international flavor on the show today. New Zealand. We got Birmingham, UK. A lot going on.
Yeah, that's right.
Anyway,
Alfonso is a world traveler, right? He's just going around checking out all these different countries. You were just in Madrid too, no?
Yeah, I spent some days in Spain, in Madrid. So yeah,
wow,
very, very cool.
I want your life.
Fonz, what charts are we looking at?
Talk to us.
Yeah, speaking of the leaders, semiconductors, let me share screen. You definitely don't want to see this.
I'm almost semiconductored out here, but all right, what do we got?
Spencer's losing his patience with semiconductors. He thinks we all talk about it too much.
You don't want to see them to get hit too much. That's the reality. So here is SMH overlay with S&P. They look exactly the same at the end of the day. So what I said before, you don't want to see these kind of stocks get hit too much. That's the reality. The same thing for home builders. Here's another chart.
I'm with you.
Yeah.
I would literally say, if you asked me outside of semiconductors, what's the most important group that you don't want to see roll over? And I get it, like things can happen with the housing market that are specific to home builders. That first of all, that's not the case right now. In fact, that we need homes, right? These guys need to like build more homes. That's the situation. But this has been a similar story to semiconductors. Like this group has just been so good this whole cycle. I don't think you want to lose them either. I would say they're the second most important.
Yeah, and also I will include industrials. It's a broad sector, different industry groups there, a lot of stocks. Yeah, those are basically the three industry or sectors that you don't want them to get hit. That's for sure.
Man. All right. What would be another important group, right? Like in the same, essence of this conversation, what are some other groups you'd throw in and say, we don't want to lose these?
I think financials are also very important because I consider them an offensive group. So
and they've been leaders. Financials have been a leader now at this point.
Exactly. Yeah. So definitely not financials, industrials. I will say, like, of course, home builders, technology in general. I think those four groups. That's for sure. As long as one of them or two of them are pressing against new highs and doing well, I think that's okay.
Industrials had been holding in there so well. Same with financials, they still are. But the other day, Tuesday, that was a really nasty candle in XLI, and some of these components had their worst day in a long time. So I don't think you want to see like that aggressive selling pressure that we're seeing in mega cap growth and large cap tech and like semiconductors. I don't think you want to see that spread to other groups like industrials and financials.
No, definitely not.
I'm not saying it is yet, but look at Tuesday's action.
Let's just say that the semis and the financials and the homies, they all start to roll over. If during that rollover coincides with a rotation into, I don't know, energy, materials, is that not just the natural evolution of a bull market?
I don't think it would be enough the way that you described it. Like, okay, if we were to lose mega cap growth, lose large cap tech, lose the AI leaders, fine. But then like small caps got to be there to pick it up. Like you need the banks to be working, like the biotech, speculative growth. Like you need a lot of other stuff. I don't think like materials and energy would get it done. They're like nothing. They're itty bitty to the market.
No, I know. I understand from a weighting standpoint, but
it definitely wouldn't hold up the indexes.
Also, the composition of the indexes at the end of the day, right?
Say it again.
The composition of the major indexes.
Yes. Yeah. So okay, from an index standpoint, they wouldn't hold up, but that doesn't mean that there couldn't be rotation into again purely hypothetical if we did see that. But I'm just sort of thinking out loud there.
You would need a good amount of stuff to pick up the slack. Like if you got like a healthy growth value situation, which it just hasn't been clean at all this whole cycle. But if it was something like that and materials, energy, industrials, financials were all working, then we lose tech and the growthy stuff, I think that'd be okay. Yeah.
Okay.
You guys want to do recess and get out of here?
Yeah, that's it.
I don't actually know if I have recess today, but nonetheless, let's do recess and see what we got. Where's my bumper? Here it is. I'm on a slow laptop today, so bear with me.
Yeah. No, we've been bearing. Spencer, I really want to hear about your time at the beach this week. Did you have a couple brouhahas and take a siesta on the sand yesterday?
Yeah, beach naps are the best naps. Basically, I go to the beach. I do 4 things. There's only 4 things you can do at the beach, in my opinion. You could, I guess 5. You can go in the ocean, which I didn't do a lot of. It's not warm this week. You take a nap. Hold on, there's an alarm going on here.
What is your week? Is that an ice cream truck? Do you have an ice cream truck in your house?
That was an alarm. You can go in the ocean. You can take a nap. You can go for a walk. You can listen to music, or you can read. Those are the 5 beach activities as far as I'm concerned. And I have done all of those things in abundance this week, right? Except for the ocean part. But naps, reading, music, walking, right? That's the Mount Rushmore of beach stuff. So a lot of that. Some mini golf last night. Got to do some putt-putt while you're in town. Always do the putt-putt.
Love that. Love
the putt-putt. Gotta have some ice cream. There's like a bajillion ice cream places on this island, so gotta have some ice cream. And that's pretty much it. We're going home tomorrow. Today's the last day, and it's always a fun time. It's a family tradition. So
yeah, you had good weather. You had good weather too. Right?
Yeah, yes, we got very lucky. No rain, no heat. It wasn't super hot. And also, the best part was no land breeze. When we get a breeze from inland, from the west, it brings the flies with it. So no land breeze at all this week. So we got very lucky.
That's funny. Well, that's great, buddy. I'm so glad.
Yeah.
And now summer's over, so it's kind of sad.
This is the end of my summer. Today is the end of my summer. So yes, summer's over. That's all I got.
Yeah, I don't have anything for races today. It's getting colder here. Definitely summer is it just finished here in England, so that's what I can say. But next weekend I will be in Manchester. I will watch a match.
You're going to a soccer game?
Yeah, soccer game.
Man City.
Cool.
Sorry, no, Manchester.
Man City. Man City.
Man City. Yeah, that's for sure.
Wow.
Yeah. So that's happening next weekend. So I'm very excited.
That's cool. Glad you're doing that. That's sick.
All right, we're done. Cool. Off the
Everybody.
charts with David Lundgren. That episode is live right now on the site, stockmarkettv.com, and on YouTube. Hey, while you're here, check out the description. Check out all the links to the hot corner, links to Louis' free daily note, which I didn't mention earlier. Hit thebid.com. Check it out. Stock Market TV. We'll be back on Monday. Have a good weekend, everyone.
Bye, buddy.
Bye, guys.
I can't take no loss. I don't even know what it costs.